Nikunj, I think really the proof is in the pudding. The net worth of a lot of these PSU companies now it's 17 lakh crores against what we saw in the year 2014, 9.5 lakh crores.
Look, I mean, if you frankly ask me, PSU really has been the success story. PSU has been the success story in terms of what markets can do, what good governance can do, what government efforts can do, and what was the ability and what was the value in some of these stocks. What was called as the real ugly duckling of the stock market today has become the darling. PSU stocks were the favorite whipping boy. 2010 to 2020 was like a lost decade, from PSU banks to power companies to fertilizer stocks. Nobody cared about them. And today they really are the ones where action, where excitement, where, things are moving in the right direction, both in terms of earning, dividend payout, and what they're contributing back. Look, banks coming back, economy will do back. Defense doing well, that's great news in terms of the general industry, the general modernization of Indian Army and what it really does to the entire defense sector per se. Power sector coming back, well, the power problems in a sense will be taken care of. So, I mean, what a remarkable turnaround it's been. While PSU stocks, we may argue about the price levels where they are, we may argue about the recent run-up in railway stocks and some of the other stocks, but yes, in terms of a theme, in terms of what the positioning is, in terms of where PSU stocks were versus where they are, I think they are the leader, and I think select PSU stocks will continue to remain leader, I think, for a long, long time.
Well, yes, PSU stocks have been leading for the last 1 year, and yesterday was no different. Yesterday as well, in that last hour, we saw a massive surge on a lot of these PSU names, especially the PSU banking names. So whether it was an IOB, a central bank, a Bank of Maharashtra, all of these stocks were locked in upper circuit. And don't forget the heavyweight SBI, that showed a solid surge of around 4% yesterday. And in fact, it was the biggest contributor at the index level in terms of points. But despite all that performance coming in from PSU banking names, we failed to hold on to that 22,000 mark on the Nifty. We did see a bit of a tumble of almost 120 points from the top of the day, and that has been the trend in the market, that there has been this sell-on rally that has really fructified for the last week or so. Nifty Bank was also 200 points off the highest point of the trading session. IT was on the weaker side yesterday, call it the rub-off impact of Cognizant. But that was something that we were watching out for. And India VIX also marginally cooled ahead of that big event which is lined up, of course, the RBI Monetary Policy Committee meeting. We'll talk a bit more about that. And of course, today is the day when there's weekly Nifty expiry as well. So that too will play on minds of the traders as well. But Nikunj, this PSU rally, of course, apart, the market is failing to hold on to gains. There is this, sell-on rally that keeps on happening.
If you're a bull, you will say that, look, I'm buying on bad days and it's working. So, in this kind of a market where you know that the directional move, like in Jan, was down, I think the directional move in the month of Feb, I think, is up. Which means you buy on a bad day, you sell on a good day. It's very simple, ulta karo. Just think about it, right? On a good day, sell. On a bad day, buy. Just go against the market if you're looking at near-term move. Because if you're buying on a decline, you're getting rewarded. You're selling on a good day where markets have rallied for 2 or 3 days, you're actually also getting rewarded. So markets are frankly looking for a direction, and they're looking for that pace. That pace is either going to come from banks or it has to come from some heavyweights. I think Reliance has done its bit. Large cap banks are not going anywhere. Large part of the heavy lifting has to be done with PSUs also. It has to be done by PSU banks. So the market is looking for a direction, the market is looking for a pace. In the month of Feb, bulk of the news flow is behind us. So market action would be a function of what really happens to, let's say, in terms of the momentum and how essentially the flows would move. So it's a market where more than news, I think it's the momentum and it's the liquidity and technicals which really would be at play. And that kind of a setup, since we don't have any large big pockets of activity, at least in the Nifty 50, I guess you'll have to really trade shallow, trade opposite to the market. And the bias, I think, really is positive for the month of Feb. Unlike Jan, where it was absolutely clear that Jan is not going to be a great one, I think February, I expect that the biasness for the market really is going to be more bullish than bearish.
Yep, you can see that sort of tide turning. That's what's being reflected in the early days of the month of February. Well, it's 8th of Feb and you've got the RBI monetary policy outcome that's going to take place today. This is the first one, by the way, that's after the union budget. And we're seeing, the overall scenario right now where inflation is showing a little bit of signs of easing. And it seems like that's the consensus. 100% of the people that were polled and economists are looking at a maintaining of the repo rate. And I think the outlook and, Nikunj, where everyone will be reined in on will be whether or not the policy stance will be retained as withdrawal from accommodation.
See, this time there is a hint which has come from the finance minister. She said the inflation is under control.
Yeah.
And that's a very big statement coming from the finance minister. Now, of course, Reserve Bank of India and the MPC will have their independent view. But given the fact that rates, in a sense, I mean, the whole inflation concern now seems to be getting diluted. I expect some constructive talk on that. Then on the rate action, I think everybody knows that they are likely to maintain repo rate and they are not likely to change their stance. Withdrawal of stance to neutral could happen. That is a minority view. Third, you really want to understand their view on liquidity. I think for me that is the most important aspect because Reserve Bank of India has successfully mopped out a lot of liquidity without hurting the interest rate trajectory. Now, if that is the underlying factor which is at play, so if Reserve Bank of India looking back at liquidity coming back, and Anisha, mark my words, what is the challenge for the banking sector? Liquidity. Liquidity is having impact on liability, that is having impact on credit growth, and I'm sure somewhere Reserve Bank of India is well aware of that. So what is the view on liquidity? Then I think it is not MPC, but it really could be a Paytm press conference.
Absolutely.
I mean, I'm
That's
sure that is the biggest talking point. I mean, I don't know how much they would be able to address a company-specific concern, but I think that in a sense would really be the central theme of what have they done and will they get a second chance, and is this something which Reserve Bank of India would be seriously looking at this entire fintech and the payment gateway. So it's more of a indication on RBI, on fintech, and less on MPC. And I think that in a sense is likely to occupy a lot of center stage. So MPC side mein rakho. This is something which is of importance. So liquidity, no rate in change in stance, and perhaps some more clarification on Paytm specific and fintech in general.
Yeah, no, I completely agree with you. I think the focus will entirely be, at least of the street, in terms of what they have to say about Paytm. What were the lapses and why these actions were taken in the first place, and what's the way forward? Are those rumors and speculations which are doing around regarding cancellation perhaps of the license as well as something on the table, or there are remedial actions that are going to take place after the meeting that Vijay Shekhar Sharma has had with the finance minister as well as the RBI officials? So that is something that you need to keenly watch out for from the RBI monetary policy meeting as well as the press conference later at 12. We of course have the special coverage with a slew of guests lined up just for that. But back to the markets, and of course it's been about earnings as well. So in terms of earnings, overall it has been a good show on the overnight basis. Stocks like Tata Consumers, Power Grid have reported a largely in line to a decent set of numbers. What really stood out was the likes of Lupin as well as Cummins. The domestic sales have bounced back very sharply. The gross margins have improved. Kalpataru Projects as well as Star Cement, Jamna Auto, and even Supriya Life for that matter, for second, third straight quarter, that company has been reporting good numbers. On the losing side, however, what is expected to be under pressure is Sobha as well as JK Paper. For Sobha, the profitability eroded by as much as 52%. JK Paper also hints at the fact that perhaps the best is over. So just watching out for some of these earnings. Of course, we'll discuss the likes of Lupin, etc. in more detail. But Nikunj, of course, it's the fag end of earnings, and there was this worry that consumption has been the weakling because the likes of HUL, etc. disappointed a bit. But when you look at numbers from, let's say, a V-Mart and a couple of others like Trent yesterday, doesn't really point to a structural slowdown per se.
See, we must realize that the entire consumption space is really getting divided. You got ultra luxury where there is no problem whatsoever. It's a boom time there. Then you come to semi-urban and urban. Within that, specific categories are not really seeing what could be called as stress. And then you come to rural. Within rural, we can endlessly argue about, okay, FMCG not doing well, or two-wheelers, going through a gut-wrenching fall, so to speak. But are those the traditional indicators which we are looking at? Because if one really looks at what's happening to rural economy in terms of land prices, what's happening to things in terms of how the productivity gains have kicked in. I think the news from rural India is not that bad. Otherwise, you would have not got this kind of a number from a V-Mart or let's say from a D-Mart in terms of growth. I think the entire space per se in the consumption space is changing. Sure enough, there is a challenge and there is a compression which is clearly there in FMCG sales. But on the margin front, I think things are looking up for them. So for FMCG stocks, I think we could really be nearing that turn now, that if we get a little bit of time correction, little bit of booster which could come in the run up to the election for the rural economy per se, now that margins have stabilized and inflation is behind us, there could be mild outperformance which will start in some of the FMCG stocks. But I think the consumption space really needs to be looked at very differently. What within consumption is up, what within consumption is down, which are the categories which are doing well, which are the categories which are not doing well. I mean, I look at Zomato sales, they are still selling. I mean, it is and they're expanding. So you're eating food but you're not buying soap and shampoo. I just find it difficult. So I think that is categories which are important and companies which are important. So you just cannot, earlier it used to be okay, two-wheeler and HUL sales, you know that what is happening to India. That is not the real deal now.